welcome to On the Couch podcast. And I am one of your hosts, Danny Cardozo, and I'm with Johnny Supa.
I was going to say good morning. It is morning.
It is morning here. Yeah.
Good morning, everybody. Welcome to another episode.
It could be good afternoon if they're listening in the afternoon, could it?
Depends on what time zone they're in.
Cool.
But it's morning where we are.
Good afternoon if you're listening in the afternoon.
And good evening if you're in Australia. Yeah, sure. Or, hey, did you hear what happened yesterday?
No.
Well, how does the joke go again? Did you hear what happened tomorrow? No, because you're not in Australia. Anyways, it's a joke. I was in Australia once, and I said that to someone. Like, did you hear what happened? They're like, no. I'm like, that's right. You got to wait 12 more hours.
You were in Australia?
I did. I spent a month there. Yeah.
How did you do that flight?
Quaaludes. I mean, sleeping pills, man. How else do you do it? You take a sleeping pill 8 hours before you land, and I was jet lagged for 2 days, but
I can imagine, man. Like,
it's 22 hours.
I went to Portugal on a 9-hour flight or whatever it was, a little bit less than 9 hours, and I needed a full day to sleep, just to like put me at par.
But you've been to Portugal before.
Yeah.
Yeah. See, for me, I've never been to Australia, so I think the excitement for my wife and I was like, let's just go. And
you didn't know what. But
did you fly straight from here? That was your first stop.
No, we flew from here to LAX.
Okay.
And then LAX.
So you broke it down a little bit.
Yeah. So then it was more than 22 hours.
No, it was 4 hours to LAX.
Did you stay in LA?
No,
or did you
just layover?
Okay.
Yeah.
And the layover was how long?
3 hours.
Oh.
And then we flew 16 hours direct from LAX.
So
Could you
16.
do that, Danny? Could you do that?
I mean, I went to Dubai.
You went to Dubai?
That was like a 13-hour flight. It wasn't 16
wait,
hours.
Wait. Let's pause here. Oh, before we start the episode. So we have Australia and we have Dubai.
Yeah.
I got to ask equally the same questions. First of all, how was Australia? It's on my bucket list. And how was Dubai? It was on my bucket list.
Australia is unbelievable. So we had the opportunity to travel to Queensland, which is on the west side. And we went everywhere from Cairns, which is where the Great Barrier Reef is off of, and all the way down to Sydney. So we did Cairns, Melbourne, Sydney. We did Hamilton Island, which awesome. Is, if you've never been to Hamilton Island or you don't know, it's the Whitsundays. So all the sands are super white. We did that. We spent just under a month.
I want to go there.
It's unreal. Hamilton Island is cool because there's no cars on the island.
Oh, really?
Yeah, it's all electric golf carts.
Okay,
that's cool.
So, and then you did Dubai.
I did.
How long ago did you do Dubai?
2016.
You did it with the wife?
Yes.
Okay. Are there very strict religious? I mean, your wife had to wear the. What's it called? Is it a burqa? What's it called?
The only time she actually had to put it on was when we walked into
the palace, right?
No, not even in the palace. When we walked into the mosque. Is it a mosque?
Yeah,
it's a mosque.
I think that's incredible.
That was the only time that they sort of, listen, your shoulders need to be covered, your knees need to be hidden.
It's not a maybe, it's a for sure.
Yeah, no, it was a must.
I love it. You know, and the reason I do is
and it's just like she could show her face. That was fine.
It's just covering her shoulders.
Shoulders and knees.
But that's proper.
Of course.
You're in that's their home.
Correct. Mm-hmm.
Yeah, I love it. I absolutely love it.
Would you go back? Because this is one of my bucket list places.
Would I go back?
Oh.
It's nice. Like, everything is new, everything is modern, everything's at a higher level. I went to this restaurant there. We walked in, guys, and I tell you, this place was a 20 out of 10. Okay? It was empty. And I'm like, talking to the owner, came and introduced himself and whatever the case is, and I'm like, man, how come you guys are empty? Like, I everything about this place, the ambiance, everything about it was excellent. And he's like, over here, it's like, you built something and you're the best. He's like, I was the best. But after, the next guy is like, I need to be better than him. And he built something way better than me. And then the next guy after that has to be better than that guy.
That's a tough place to be.
It's tough, man.
Yeah.
But that's the
crazy.
Dubai. That's the Dubai vibe. I mean, you're expected. So you went to Dubai. You may or may not go back. It depends.
So I've seen it. Would I go with my wife again? I don't know. Probably not.
Wow. And you're gonna.
Would I go with friends and experience it a different way? Yes.
Okay.
Like that, I would. I mean, I would go to Abu Dhabi to go watch the Formula One.
But Abu Dhabi is different than Dubai.
It's a.
You know what I mean? I
We
think
rented
isn't it more
a car and
strict?
we Dubai is way stricter. Yes.
Dubai.
Sorry, no. Abu Dhabi is stricter than Dubai. Dubai is like. We were talking to a friend of mine. He's from Kuwait, and he's like, "We go to Dubai. It's like going to Vegas here." It's
Really?
like Dubai is our partying city.
Oh, no kidding.
And would you go back to Australia
Oh, in a heartbeat.
in a heartbeat?
Yeah, I think I'm a big scuba diver, so I love the Great Barrier Reef.
I feel like there's more you appreciate
It's
Australia more than you would Dubai.
Wow.
I really enjoyed it. The food was incredible. The experience. We've got family that lives out in Sydney, so definitely.
So, Danny, you got a bottle of tequila there
I do have a bottle of tequila here.
from Mexico, but it's called Don.
Don Adriano.
The bottle looks pretty spectacular right off the bat. I could say that.
Yes.
Yeah, I think there's a play from other bottles. I think they've got the
Stealing ideas.
yeah. What's this?
Well, I mean, it's like the
That
Mexican.
one.
the
that
Grand,
one.
It's got the bit of the Grand Mayan.
They bring in the Mexican traditions, right?
Yeah.
Like
That-
the
very good.
nice
Well said.
painted.
Now, the next step is, what is today's episode all about?
I think today's episode is what's the difference? I think we talked about it a bit on our travels. What's the difference? And I think a bit of the conversation should be the same. What is the difference? I think it's the age-old question that we keep getting over and over again. What's the difference between a bank? What's the difference between a monoline? I don't think many people know that difference. And what's the difference between a mortgage specialist who represents a bank and what's the difference between us agents and brokers? That is...
I like this topic.
Yeah, me too.
Where should we start? Should we start with the specialist over the broker? Let's start there because
Yeah.
if you're looking for a mortgage, you're going to be heading towards either one of two, a specialist or a broker.
Yeah, why would you? What's the difference? And what are the benefits, I guess you can say, features and benefits. So,
I mean, we're going to be pushing the broker side. Obviously, we are brokers.
yes, of course, very biased, but I think there's a few reasons. I'm going to start from the beginning. On our side, we're regulated by FSRA, number one. We're licensed. We have to have continued education. Not to say that they're not educated on the bank side, but there's no regulatory licensing that the specialist has to have in order to service you, the client.
Right. So they can just literally apply to be a specialist. They get thrown in there, and right away they're trading mortgages. It's like, but you've had no education.
They don't know the difference of the 5 C's. Like not that they don't know. I shouldn't say it like that, but they don't have the schooling or the education. There's no license, basically. There's not a license that they have that allows them to trade mortgages. Correct. What is another difference?
Can we say that specialists right now are more popular than the broker?
100% in Canada. Yeah.
Yeah.
I think brick and mortar has always been more popular because that has been the age-old way. Like, mom and dad came here and they walked into the CIBCs, and that's where they got their banking checking account and savings account, and that's where they got their mortgage from.
You said brick and mortar.
Yeah.
Danny, do you agree with the whole brick and mortar idea? Do you think that's a very old school way of thinking about things now that it's all social, online, and everything?
Well, 100%. I mean, you walk into one of these TD or CIBC or RBC, it's like you're stuck with one type of product.
Yeah. Or maybe a suite of products, maybe.
Okay.
Maybe 2 or 3 different things. There's not a lot of products where they can offer
That
you.
specialist is going to put you into one that might not be the proper one, but it's the only one available to them.
Yeah, it's like walking into a car dealership with only one brand. They're gonna sell you the product that they have. That's what they're trained to offer you. So they're gonna offer you that product, and they're gonna convince you that that's the right product, without asking you your KYCs, I guess you can call it. There's a big difference, a very big difference. The fact that they're the accessibility and the availability, I think, is a big difference too. Like, I mean, they're scheduled of 9 to 5. They're inside the office. They're a little different than them being outside the banking hours.
I hear it a lot from like realtors is like, I'd rather work with a broker just because You know, when I need you, you're there.
Mm-hmm.
When I'm out showing houses, I'm not out showing houses between 9 and 5. I'm usually out with my clients after 5.
Do you set a certain time, like in your particular business, that
So-
they can get to you?
So, am I available 18 hours a day or 16 hours a day? Yes. But I'm not available in a sense. So,
Yeah.
my working hours are 9 to 5. If you need me after 5 o'clock, I'm available. Please send me a message. And if it's important, I'm there for you.
So if there's urgency,
Yes.
they can reach you. Where if you're at an institution, that's sorry, that's it.
They're working their hours.
Yeah, it's a little different.
So obviously our model is better.
Well, I'll give you an example. I mean, I had a client who has 3 kids, so their time was a little different. Their availability to review documents was only Sunday morning, so I made that time available for them, and we reviewed the documents on Sunday morning. One of the biggest things is this, guys. When at the banks, sometimes if it's a bank specialist who's doing your mortgage, they're salaried, so there's not. I'm not going to say that there's no care. There's not enough care. Customer service is not important. And I say that with a grain of salt. I don't want to get attacked here by this, but where us as commission-based individuals, we have to make the time available to be accessible and available, whether it's for the client or if it's for the referral source, realtor, or if it's for the lawyer. Those are some big differences.
Would a specialist contact their client to let them know about a better rate situation? Like, what do you think?
Oh, a good one will. Like, I know some good specialists.
And you think they can't?
They can't.
They can't,
No.
right? They wouldn't build a budget showing them, like, let's get you out of the mortgage that I put you in a year ago and let's put you in a new one
No.
because you're going to save in the long run.
Well, they don't have the access to the other better rate. They're stuck where they're at because they only have that one product. Where the advantage of people or agents like ourselves, if we put you with a lender today and tomorrow another lender offers a better product and a better rate, and we know through our spreadsheet or our budget sheet that we can break you out of what you're currently in. Yes, there's a penalty involved, but over the next 2-3 years being in this product, we're going to save you that money over the course of 6 to 12 months. Yeah, that's the advantage of a broker. That is a big advantage. Definitely. Somebody who's watching the trends, who understands the metrics.
I feel like that's like insurance for a client that we work with.
Mm-hmm.
That those opportunities, we don't just look after them for this transaction today. We're definitely looking after them for their entire length of the mortgage, or even planning for their future.
There was another comparable you guys said right at the beginning of the show that you were going to talk about. What was it again?
So banks versus monoline.
Monolines.
Yep.
Okay. Talk to me about that. This
So
is
Johnny,
very
what is a
subjective.
monoline?
Yeah.
So there's a few different things that we're not going to dive too deep because I think we don't want to.
That's a show on its own.
Yeah. So you have Schedule 1 banks,
Yeah.
and then you have brick and mortar banks, which is the big banks that we know, and then you have monoline banks. So a monoline bank is one who lends money and does not allow you to deposit money. So there's no depositories, there's no investment funds, there's no RRSPs, there's none of that. It's just we're lending money. So just mortgages is their thing.
So there was a client this year that came in our office. We're looking at their current mortgage. They're like, "Oh yes, I'm with a private lender or a B lender or something along those lines." And I pull up. I'm like, "Okay, let me look at your statement." And it was CMLS, which is a monoline bank.
Correct.
And looking at their statement, and I'm like, "You're with an A lender."
Yeah.
She's like, "Really?" Like, yeah, this is an A lender. So a lot of people get confused right away, like that they get put in these monolines,
yeah.
and they automatically assume that they are with a B lender
The negative condensation
or alt.
if
side.
it's the alt side, that the uneducation that hasn't been provided by us mortgage agents in the past, which is why we're here today doing this show, providing the education and the word tracks, is to let people know that banks like CMLS or MCAP or RMG or First National, they are not private lenders or B lenders, as some may call them. They're A lenders. They are monoline lenders, and there's a big advantage to using them.
I've never heard of this I think I speak for most people when I say I've never heard of this before. It almost seems too good to be true. Why is it that people have never heard of this?
Because the education has never been there. I think, first and foremost, we're only 10,000. We've just reached the 10,000 mortgage agents in Ontario,
Okay.
right? Ontario? Yeah.
Maybe.
Or Canada.
Probably Ontario.
Ontario, I'm pretty sure. So the number of agents is not as high, and we're not out there in front of the camera or sharing the information with our public. But neither are the banks. They're not advertising on TVs. They're not advertising on.
Well, they're very strict. So
let me just jump in. There is 13,179 mortgage agents in Ontario as of yesterday.
Perfect.
Yeah.
But how many of them are really practicing?
No, that's
and
right.
it's like out of the 13, you're probably down to maybe 4,000 that
Yeah,
are
and
actually.
out of the 4,000 that are practicing, how many of them are in front of the camera?
Yeah.
So if someone came up to you and wanted to know more about this mono lending, is that something that you would shy away from or shy them away from, or something that you would actually delve into?
No, there's lots of benefits of working with a monoline. First of all, if you're purchase a property and it's could be an insurable or insured product, they're going to give you better rates than you would go with a institutional bank.
Yep, all day.
And penalties are
That's
like saving money in
So
the
let me
long
ask-
run
yeah.
is way better with a monoline.
Let me
bank.
ask this question to the public. If you've ever broken your mortgage from an institution like the top 5, what was your penalty like? Leave a comment below or message us and let us know what your penalty was like. And I can guarantee you that your penalty would have been half that at a monoline, because at the banks, there's posted rates. So when you go look on the institution's website, they're going to have a posted rate. And that posted rate, based on what the current rate would be at the time of you breaking the mortgage, is the difference between the two. And that's what interest rate differential is calculated on. Where on the monoline, it is their prime rate, and that's what they're basing it on. There's no posted rate. And if anybody else wants to pay attention, go pay attention to what their prime rate truly is. Some lenders have a higher prime rate.
100%.
So
What does that mean?
This blows my mind.
yeah. So
What you're telling me is, what you're telling everyone is that if you went with a mono lender, you would.
it's cheaper every day of the week.
This is crazy.
And they have better prepayment privileges. And they got portals just like every other lender. They have apps that are available on your phone. You can access the information that you currently would want to know about your mortgage. It's there.
What's the downside to this, guys? There has to be one.
There isn't.
No, Danny, don't give
mean-
me that smile. And not tell me.
So up until maybe a couple of years ago, you were able to get a line of credit through the institutions, right? That wasn't available with the monolines, but now they're starting to pop up. So
Okay.
it gives them an advantage again.
That, and then I guess the brand itself, the name. Like, people don't know. RBC is a top tier bank, right? But you've never heard of Wealth One,
So I get the question, like, I put one of my clients in a monoline and like, could this lender go bankrupt? And I'm like, why would you assume that? They're all I'm not gonna say funded, but
They're backed by the government.
They're backed.
They're Schedule 1 banks. So they're not some institution investment fund.
So why is everyone using the banks?
So
That's the question.
Because they're not using brokers.
Yeah.
That's what it comes down to. So they walk into the institution the traditional way of lending money, and they don't know.
They feel secure. And I'm not against that. I understand that the comfort feeling of walking into the store, the place, or the brand itself. They've done a great job in building a reputation for the last half a century.
Is
You
the
know how-
interest rate
so-
better for the mono lender?
Sometimes yes. Yeah.
At times.
This is crazy.
At times.
Yeah, like right now, there's one. I'm not going to say who, because we use all these banks for different reasons. So, but there's one in particular bank that we would use. They were our go-to for the longest time. I wouldn't send a file there. I haven't sent a file there for the last 4, 5, 6 months, maybe, because their rates are not attractive. They are pushing their portfolio away because their debt tower is too tall. And if for people like myself and Danny and our team who study the banks and their economics, and we listen to their economists, they're pushing portfolios away because their debt tower is too tall and they can't service what they currently have because 2-3 years ago they were lending money at 1.5-2%.
They were the lowest,
They were the lowest,
and now they're the highest.
yeah. So they have to move their money and they have to move the portfolio.
I'm gonna leave everyone on the biggest cliffhanger yet. This, in my opinion, this is probably one of the most informative podcasts we've ever done because I'm serious.
I don't know about that, but
No, but mono lending is absolutely like
So
a
see,
game changer.
I'll give you an example. In the United States, I don't know what the number is, but the number of Schedule 1 banks is a lot larger than the actual brick and mortar, which is what makes loan officers, which is the equivalent to us mortgage agents, a lot more powerful because they've got a plethora of institutions that they can lend, that can get you or lend you the money. There's different products. There's products for veterans. There's products for jumbo loans. There's products for everything. We're here, we're still teetering heavier on the institution side. I think year over year, the broker channel is increasing, which is why BMO is going to make an announcement if they haven't already, but they're coming in early 2024.
yes,
So BMO is entering our world
With what?
with a broker package, broker
products
broker
that we can now broker.
like HSBC made an announcement. Well, they've entered the broker world last year, which was a big deal for us.
So 2024 is where you start seeing some of the bigger institutions jumping on board.
Well, BMO's made the announcement that they're coming into 2024. Yes. So for those that commented recently, like, hey, you know, we give good service too. Yes. But I think the broker world gives better service.
And with that cliffhanger,
Yes.
we need to discuss another very important topic, and that is
What are we drinking today? No, so not that what we're drinking, because
what are we? What
It's
are
still
we?
morning.
It's still too early
It's still
to
too
be
early.
drinking right now, but
yeah. What's that bottle?
I got
there, Danny?
a nice bottle of Don Adriano, 1950. This tequila is 100% agave, añejo.
Say it.
Agave.
Agave.
Añejo. I've
Añejo.
practiced. I've practiced.
This is a ultra premium bottle.
What does that mean? Ultra premium.
I mean, it just says that on the bottle.
Perhaps-
but
perhaps
like for
distilled
the
longer,
price,
maybe?
Yes,
What's-
100%. So
What's the price?
this bottle's sitting at around $250.
You guys know where I stand on expensive
I know.
bottles.
So
Johnny's-
Johnny, what's the rating again? We do price.
Price, appearance, and taste. So based on taste and price,
Again, if you like to sip on tequilas, this one's an excellent one. It's been aged for 18 years. Sorry, 18 months.
18 years. Means
Yeah, 18 months. Sorry, I apologize. Bottle, excellent. The presentation is beautiful. If you can see this, like,
that is one nice
Yeah,
bottle. I will give the appearance. That's a 10 out of 10 bottle for me. I like that a lot.
what am I giving this? I'm giving this a good 8.5 for sure.
8.5. It's a very generous
Yeah.
score. Johnny?
Yeah, so I had the privilege of trying this one recently.
Yeah. Want to explain how it tastes, Johnny?
I mean, the appearance of the bottle is extremely nice. The price gets me. I just can't get over the fact that I don't understand that it's just marketing. $250 for a bottle of tequila is outrageous. I don't care if it's
Well, I mean, it sits in a barrel. Like, this is a wine-used barrel for a longer period of time. Like, these other ones are sitting in a barrel for like a month.
Danny,
and
but
then
the problem is that when you have so much of a tequila selection, price becomes a huge factor.
Yeah.
Because think about it, you go to the LCBO and there's 100. Would you immediately go, you know what? Let me go and spend 240.
no. That's why this bottle's gonna get a 7 out of 10 for me. It's not.
That's it.
Yeah. The taste is okay. It's all right. I think there's a bit of the. I don't know. There's an aftertaste in the palate that I wasn't really too pleased with.
Fair enough.
You agree, Danny?
enough. I thought it was smooth, man.
Well, something
It's
else
nice.
that's really smooth is where can they find you guys?
You can find me at 12 Par Boulevard. No, you can find us online at Your Nesta Financial. You could like, comment, share if you like what you're hearing. I think this episode here today with Danny and I was extremely informative.
We got to talk more about it.
I think so too. I think we'll do a long episode of this.
Of diving into the monologue.
Yeah.
Lending right away.
Yeah, and you can find us on Spotify, on YouTube. Please like, comment, share if you like any parts of this podcast, or even if it's just a tequila. Share it with a friend. Let them know, and that's it. Danny, where can they find you?
On social, Mortgages by Danny C.
All right, guys. Thank you for
See you later.
watching. See you next time.